Assalamualaikum warahmatullahi wabarakatuh. Ladies and gentlemen, here I would like to present our research, and the title is COVID-19 and the Financial of Performance Sharia Rural Banks in the Indonesia. So for this presentation there are some of contents. The first one is abstract, the second introduction, the third one literature review, and the last one is discussion and conclusion. For abstract, this is a study purpose to analyze influence COVID-19 on the performance of Islamic rural banks in Indonesia. So as we know, banks in developing countries are more vulnerable to this external and massive threats. So therefore, it's very important to study their performance in the area before and during COVID-19. So we take the population of VPRS. In the study were 163 companies. Because the data was incomplete and not available on the company website, so the sample could not be taken from all population. So that there were 74 data that met the criteria for being sampled. And also because they have the most complete financial reports and have been published in 2018 till 2021 period. Next to introduction, according to George Segot and Leone 2013, the consequence COVID-19 for the banking industry in developing countries could result in major problems due to COVID-19. There will be a large increase in the number of people who default on loans. Withdrawals will be difficult. Clients will withdraw funds in saving to finance basic needs. So the amount of fund loan reserves will decrease, and the demand for new investment will also decrease. Although banks are considered as a tool for growth in any economy, they are important in facilitating the activities of emerging and developing economies has increased manifold due to the role of banks as a providing capital financing in both the short and long term. Also, the various of literature highlighting the potential implication COVID-19 for banks have been carried out in both developed countries. According Chacheti and Schoenholt 2020 and developing countries Barua and Barua 2021. That so during COVID-19 pandemic, the condition in the banking sector were very vulnerable because many debtors from various industrial sectors were affected by COVID-19. So the experience problem in carry out their obligation. That's according to Chetty and Schoenholt 2020. What does it mean is this study contribute to literature following aspect. The first one, literature examine the impact of COVID-19 on macroeconomic perspective, such as economic growth, international trade, and also oil price, and the last is gold price. And to understanding the financial performance of all BPRS and BPR as in Indonesia is absolutely necessary because of several various studies separately analyze BPR and BPRS, such as according Mohari Hossein 2014, Hartono 2008, and also Septianto and Widiharits 2010. Next to literature review, for BPRS was one of the Islamic banking financial institution was operational pattern follows Sharia principles or Islamic muamalah. BPRS was established based on Law No. Number 7 of 1992 concerned with government regulation number 72 of 1992. The bank was based on principle of profit sharing. Principle of agents contract in Islamic perspective is based on the asifah concept, namely akidah, that's obedience to Allah Ta'ala, shiddiq is true, fatona is intelligence, and amanah is honest or trustful, and tabligh is communicative. So that is the guidelines for the relationship between owners and management are based on agency theory in Islamic perspective. The lost income during COVID-19 because there are no sales, and that one of disadvantage from COVID-19 pandemic. And also in Indonesia, the spread of the coronavirus has weakened the performance and capacity of Islamic bank, especially debtors. The weak performance of debtors can increase the risk of financing, which will disrupt banking and the financial stability of Islamic banking. COVID-19 has become the focus of great attention for the state of Indonesia because of the problem it continues to cause. There are many losses due to COVID-19 which have an impact on the Indonesian economy. So the economic development of the country basically aim to achieve social welfare through rapid economic growth and fair distribution of income during the COVID-19 pandemic. And also the economic of hit all businesses experience a slowdown including BPRS. The last is discussion and conclusion. We see that the table for the coefficient of COVID-19 pandemic is not significant. The COVID-19 has not an impact on BPRS performance due to the segmentation of BPRS consumer, mostly rural communities who have income from agriculture, plantation, and trade. So this effort did not an effect on reducing the income of BPRS consumers during the COVID-19 period. Thus, COVID-19 will not impact on the financing has been distributed by the BPRs. And the second is CER has no effect on ROE. There is no effect of CR on profitability because banks are very careful in investing their funds that the CR value in accordance with the provisions. Next, FDR has no effect on ROA. The higher the FDR doesn't become a benchmark for banks to obtain high profitability, and NPF has no effect on ROA, and this is possible because the non-performing financing of Islamic banks in Indonesia during the study period was not so large in nominal value. Then OCOI has a negative effect on ROA because any increase in operating cost that is followed by operating income will result in reduced profit before tax and will result in ROA. The operational cost ratio is used to measure the level of efficiency and ability of a bank to carry out its operational activities. And the last is size. We see that size has a positive effect on ROE because a bigger bank has a better performance. It is all from me. Assalamualaikum warahmatullahi wabarakatuh.